But first, we start with HSBC, which is today shedding up to 50,000 staff right around the world. Now, about half of those people will be losing their jobs directly. The other half work for businesses which HSBC is planning on spinning off. The corporate cull comes as Europe's biggest bank now downsizes to try and reduce its costs. It's also mulling moving its headquarters outside of the UK. Well, this is all part of the CEO Stuart Gulliver's strategy to reshape the business to increase returns for shareholders. His intention is to save the bank about $5 billion a year by the year 2017. So here's more details about the plan in question. Well, the bank is selling off its operations specifically in countries like Brazil and also Turkey, accounting for around about half of those staff cuts I was mentioning before. And it will also pull down the shutters on about 12% of its branches and push customers towards instead internet banking services as well as self-service machines. Now, it's not all about retrenchment, though, because the bank does have plans to expand its operations in Asia, especially in areas like asset management and also insurance. Well, shareholders gave the news a bit of a mixed reception today. HSBC stock rose just slightly at first before, as you can see, falling into the red, currently trading down about 0.75% in the London session. Let's get a bit more analysis on where this bank is actually headed. Martin Arnold is the Financial Times banking editor. He joins us live from the FT's newsroom on the other side of London. Great to have you on the show, and thanks for sharing your time here. Share us also your views here on this particular move from HSBC. Does it surprise the investor community, Martin?
I don't think there were many rabbits that have been pulled out of the hat by HSBC's chief executive, Stuart Gulliver, this morning. The shares, as you said, have fallen slightly or down slightly. So the very detailed presentation that the bank has given to investors this morning seems to have underwhelmed most of them. And there are a lot of questions that are being asked. The presentation is still going on. They've just taken a break because it's such a lengthy and detailed presentation. But the questions that are being asked do reflect some of the skepticism among investors, which I think comes from the fact that Stuart Gulliver has been in charge for 4 years now, and his previous strategic plan failed to hit many of the targets, including cost-cutting and profitability that were set out at the time. So there's some skepticism as to why should we believe you this time that you will hit these targets.
Where do you think HSBC is heading? Because it has been known up until now as the world's local bank. They can't have a hope of pretending to be the world's local bank if they're cutting about 20% of their staff and retrenching from all sorts of countries around the world and making themselves an internet bank.
Well, they are retrenching, as you said, from Brazil and Turkey, and the sale processes are underway for both of those countries. But investors are asking why why their retreat isn't more aggressive. For instance, they're underperforming business in Mexico, and also their retail banking operations in the US are two areas that investors would like to see the bank come out of, because they can't see why they need to keep those operations as part of the group. They have shed their tagline of the world's local bank. They're now talking about being the leading international bank, whatever that means. But there's a definite strategic shift going on here at HSBC, away from some of their lower returning businesses. They're cutting about $290 billion of risk-weighted assets in, well, as we said, Brazil and Turkey, and also their investment bank, and they're shifting that to invest in higher returning areas such as Asia, and particularly the Pearl River Delta. There's a lot of talk at the presentation today from Stuart Gulliver in particular about the huge potential of the Chinese economy, in particular this heavily industrialized area in the Pearl River Delta, which HSBC sees itself as particularly well positioned to capitalize on.
Martin, just briefly, there's been a lot of talk about HSBC shedding the UK as its location. I believe that hasn't come out of the conference call as yet. Decision will be made later on this year. How significant would that be?
Well, it would be massively significant, both symbolically important, politically, if HSBC does decide to leave the UK and move its headquarters. It would be pretty damaging for the government to lose what is one of the world's biggest banks from having its headquarters here in the City of London. Stuart Gulliver said today they haven't decided. He laid out 11 criteria that they will use to assess the relative merits of different potential locations to have their headquarters. But he did say that if they did move, it wouldn't be a massive impact on jobs. It would only affect about 250 people in their central head office functions. But tax is very important, regulation is very important, transparency, and also he did mention government support for financial services. So he's clearly ratcheting up the pressure on the British government, particularly on the areas of tax and regulation, to try and offer some kind of olive branch to HSBC in an attempt to keep them from leaving London.